Hi, I know you guys are working through the material in the workbook, but I thought maybe it would be helpful if I provided some summary information to you. And since I used to teach this class face-to-face when I was at Columbus State, I did have some presentation material put together that I used to go over in class. And so this is kind of an overview lecture that I used to give. I'm not going to go through it in as much detail as I would in a class setting because I don't think anybody's going to sit through and listen to the whole video if I do, but I thought I would at least hit the highlights. So first of all, again, we've got your introduction is your accounting and financial reporting. We've got a number of different types of governments. You've got the federal government at the top. You've got 50 different state governments. You've got local governments, and you've got special purpose governments that exist. Examples of special purpose governments would be various types of districts, like a water management district, a sewer district, a park and recreation district, that are separate from local governments. Okay, and local governments are typically creatures of the state. Of course, states are part of the Constitution, as is the federal government, and the state government also sets up special purpose governments. And then you've got a variety of different nonprofits that we've already kind of read about. So there are 52,000 plus general purpose governments in this country. There's another over 38,000 special purpose governments and approximately 2.3 million nonprofit organizations. And again, those numbers are conservative because they're a couple of years old. For accounting and reporting, we're going to focus on governments. So the Governmental Accounting Standards Board sets the standards for government accounting. The focus is on accountability to primarily citizens and on something called interperiod equity. And that subject will come up. It means that we really want to capture what we're going to spend in a particular period. So if we collect taxes in one period that's going to be used in another period, we need to be able to report that in the period when it's actually going to be benefiting the government and its citizens. Let's see. All right, we're going to come here. So for state and local governments, the financial reporting, we want to report economic, social, and political decisions and focus on accountability. One of the things that you're going to find different about state and local government financial statements is the inclusion of the budget. The budget is a legally adopted document that is entered into the accounting system by journal entry. That is not something you guys are used to dealing with, and we'll talk about that in a few minutes. We want people to be able to assess financial condition and results of operations. We want to assist in determining compliance with laws, rules, and regulations. And we want people to be able to determine whether government is spending money efficiently and effectively. Are they being economical in their choices? So is a comprehensive annual financial report required? No. This is a state-by-state decision as to when and in what form financial information needs to be reported by a local government to its citizens and to the state. And so each state has its own law. They can elect to produce a CAFR, or a comprehensive annual financial report. That is elective, but it isn't necessarily required. They do include management's discussion and analysis. They typically are going to have something called government-wide financial statements and also fund financial statements. They'll include notes to the financial statements, and then they'll have required supplementary information other than the management discussion and analysis. And some of the additional information that's provided in a CAFR include budgetary financial statements, meaning that they're comparing budget to actuals, which is something completely foreign to commercial accounting. We don't do that for commercial enterprises. However, we do it for governmental, for accountability purposes. So right here for the government-wide financial statements, okay, operational accountability is very important. For what we call the governmental fund financial statements, it's about fiscal accountability. The measurement focus of the operational accountability government-wide statements is flow of economic resources. For the governmental fund financial statements, the focus is on current financial resources. We use the accrual basis of accounting for government-wide financial statements, so revenues and expenses are recognized when some exchange takes place, or for non-exchange transactions, there's rules for recognition that are set up in GAAP for government. Modified accrual basis is a little different, and we'll get into some of that in a little bit, but one of the vocabulary words you're going to have to get used to seeing is something called expenditures. And so you're used to seeing the word expenses. Now you're going to be learning something about something called expenditures. They're very similar. It's a matter of definition. It's not just a word. There is some importance to it, but this is a word that's used to describe certain things that are expenses at the government-wide level, they're expenditures at the fund level, and there's some reasons for that we can get into. Oops, there we go. So we've got a couple of different fund types. I want to talk about that for a minute. There are something called proprietary funds. And within proprietary funds, these are our business type activities. And then there's fiduciary, which we call trust and agency funds. We won't deal as much with this semester, although we will cover it, but we're going to save that discussion. We will talk about the governmental versus proprietary distinction again, 3 major sections in a comprehensive annual financial report that you need to be aware of: an introductory section, a financial section, and a statistical section. This is a more detailed view of what's included in a comprehensive annual financial report. And so I'm not going to go through all the details here right now because that's not really the point of it. But again, I'll pull this up. You can see it. This is what's in the introductory section. This is what's on the title page, the letter of transmittal. And let me go through here. All right, so here we go. So we've got 3 types of activities that occur within government, or that describe what government does. So we've got governmental activities. This is the administrative support and the core government services. So you can see examples are the city manager's office, accounting, human resources, data processing. Then you've got core government services, police and fire, public works, culture and recreation. Sometimes transportation is included in there if it's being funded with tax revenues. Business type activities are largely self-supported by user charges, and so these can be public utilities or transportation funded by user fees, hospitals, and golf courses. This also could include parking garages. And then fiduciary activities, this is where the government acts as an agent or trustee for other parties that are outside the government. So if they're an agent billing and collecting taxes for other governments, holding it and then sending it to them, or in the case of managing pension plans, they hold assets in trust for another party. So they are watching over their employees' pension plans. That's considered a trustee relationship. The agency relationship would be where they're collecting taxes for the state or maybe the federal government and remitting those to those other entities. And so that is an agency type relationship. So this is the government-wide level. We've got 3 activities: governmental, business type, and fiduciary. The reporting model that's used in government accounting is a dual track reporting model. And so at the government-wide level, we've got 2 primary statements: the statement of net position and the statement of activities. The statement of net position is like your balance sheet. The statement of activities is like your income statement. There are the three fund types that we talk about. We've got governmental activities, business activities, and fiduciary activities. Okay? For governmental activities, if we drop down to the fund area, this is the dual track nature of governmental accounting. At the fund level, again, we're worried about current issues. Here, it's more of a long-term perspective. And so here we have different types of funds within the governmental fund. There is a single general fund, and then there are some other types of funds: special revenue funds, debt service funds, capital projects funds, and permanent funds. And then you've got these internal service funds. These internal service funds provide services to either governmental or enterprise funds. Sometimes they'll do both, but they may provide service more to one than the other. It just depends on the nature of the internal service fund. An example of an internal service fund might be a centralized information processing department. A transportation department could be an internal service fund. So any number of things could be considered an internal service fund. It depends on how the government wants to organize itself. And so under governmental activities are aligned with or composed of governmental funds and also the internal service funds. Enterprise funds, these are your true business type activities. These are the activities where they charge a user a fee for service or a fee for product. And so these align with the business type activities at the government-wide level. And then over here you've got your fiduciary funds, which are your agency funds and your trust funds. Okay, again, we won't talk about those as much right now as we will over in this general area. Okay, so this is important. For funds, we have a balance sheet. Instead of a statement of net position, they just call it a balance sheet, and it reports on all of these governmental funds. You have the statement of revenues, expenditures, and changes in fund balances. For proprietary funds, you've got the statement of net position, statement of revenues, expenses, and changes in fund net position, and a statement of cash flows. And again, these are more like business type activities. And that's why you start to see a more traditional statement, although they still call it statement of net position, which is similar to the government-wide statement. And then over here, there's the statement of fiduciary net position and the statement of changes in fiduciary net position. And that's because there's no operations going on in the fiduciary area. Remember, agency funds, they are holding or collecting for somebody and remitting to somebody outside the government. Trust funds, they're the trustee for a fund, like a pension fund. There's different types of elements. Remember the elements for commercial type accounting. For GAAP, we have assets, which is present capacity and control. Deferred outflows of resources. This is where their use benefits a future period. We have liabilities, which are the present obligations. We've got deferred inflows of resources, which is that we're going to acquire for a future period. Then we've got our net position, which is the residual. It's what's left over. And then we have inflow of resources, which is acquisitions for the current period, and outflows of resources, where use benefits the current period. So those are the basic elements that you'll find in what they call concept statement number 4 in the Governmental Accounting Standards Board GASB standards for governmental accounting. For the government-wide statements, these are the full accrual statements. You've got the statement of net position and the statement of activities. For a primary government, which is like the city of Dalton, you're going to have governmental activities, business activities, and you may have some discretely presented component units. Those discretely presented component units, there's a test to determine whether they're discretely presented or something called blended. The accounting and reporting at the government-wide level is, again, economic resources measurement focus and accrual basis. So the accrual basis accounting is very similar to the regular accrual basis accounting you're used to for private businesses. The focus again is on operational accountability. So the focus is on program revenues versus general revenue. So fund statements. What is a fund? It's a fiscal and accounting entity. It's a self-balancing set of accounts for a specific activity or objectives, and it's special regulations, restrictions, or limitations that exist on those funds. And so think of it as silos within the government. So there's the government, and then within the government, there are these subdivisions that occur. Those are the individual funds that tie to specific activities that are occurring. We have the governmental fund. With the governmental fund, we generate a balance sheet, the statement of revenues, expenditures, and changes in fund balances. Within that, it includes a reconciliation with the statement of activities at the government-wide level. The focus is on what's available currently, so current financial resources, and they use something called the modified accrual, which has to do with recognition. Governmental funds can include general fund, which, remember, there's only one general fund for a primary government. There can be multiple special revenue funds, multiple debt service funds, capital projects funds, and then you have a permanent fund. You can have a permanent fund. In governmental funds, we look at expenditures versus expenses and focus on fiscal accountability. And this is where the budgeting comes into play. Okay, budgets are actually recorded in the accounting system, and I know that seems kind of foreign to you, and we'll have to talk about how that's done. But that's why we call these expenditures versus expenses. So proprietary funds, that's another type of fund. We have internal service funds, examples, and these are variable because it depends on the government. It could be purchasing, warehousing, data processing, or information technology, motor pools, which is like transportation internal to the government, and then self-insurance pools. And then you can have enterprise funds, which is like the running of a municipal golf course. So enterprise funds, the debt is paid solely by revenues generated by the enterprise. They expect full cost recovery, which is by law or regulation, and then they have a pricing policy that's set to recover the full cost. So those are kind of the three conditions you look for. Is debt paid solely by revenues generated from the enterprise? Is full cost recovery required by law or regulation? And do they have a pricing policy that's set to recover the full cost of the services provided? Fiduciary funds have agency funds and trust funds. Agency funds are custodial in nature. So example, sales taxes, they're collected and remitted to the state. So Dalton or Whitfield County will collect the sales taxes and remit it to Atlanta for the state of Georgia. Trust funds have a long-term orientation. The major example is pensions, and it's about the management of resources. A lot of times they hire somebody to act as the manager of the resources, and then the local government manages that contract with the fund manager. And in some cases, the state will actually set up funds that local governments and school districts can participate in for the pensions of their employees. And basically the local government or special purpose government will contract with that state organization for the participation in that particular retirement. So trust funds, pension or benefit trusts, investment trust funds, and private purpose trust funds are the three basic types of trust funds. Now, fund balance classifications. Remember, we're not generating equity here. There's no equity. So then remember with, we had basically a residual amount for nonprofits, and so we have the same thing here. So under fund balance, we can have non-spendable, which means they can't touch, it's not available to be spent. They can be restricted, it can be committed, it can be assigned, or it can be unassigned. And each one of these has a different level of restriction. So most restrictive to least restrictive. So non-spendable is the most restrictive, unassigned is the least restrictive. So unassigned, basically it's just general law that governs how that money is spent. Assigned is usually where you kind of put some money aside, kind of an envelope system. I'm going to put so much money aside for groceries, so much money aside for gas, so much. It's not really, it's internal. It's oftentimes management decision. Committed is a little bit more of a stronger term, where there's maybe some legislative action that's occurred. Restricted is by an outside party. So somebody gives them money and restricts the use of that money for a specific purpose. And the non-spendable, it isn't in a condition where it can be spent. Okay, so you can't spend a truck, you can't spend a building. Those are non-spendable parts of the fund balance. So, major fund reporting. When does a fund become a major fund versus being aggregated into that other funds classification? Well, it must meet both by element, the 10% rule and the 5% rule. So it has to be 10% of governmental or enterprise, and then 5% of governmental and enterprise. So it's a 10% of one or the other. And then the second rule would be 5% of both combined by element. Now remember, we went over the elements earlier. Assets, liabilities, your fund balance, inflows, outflows, that kind of stuff. Non-major fund reporting is aggregated in that single column, and combining statements are set up as supplemental statements. So this is a nice kind of reporting summary worksheet that I'm providing to you guys that you can take a look at. I'm not going to read this whole thing to you, but it basically summarizes kind of what we just went through. Now, I think at this point I'm going to stop here. So I'm going to put it back on this page. I'm going to stop here. I'm going to create another video that will kind of talk you through what we mean by the budgetary accounting and recording the budget as a legal document that gets incorporated into the accounting system. So hang in there. Bear with this. I know it seems, maybe it's boring to you. Maybe it doesn't seem relevant to you. But, you know, you're going to live within a government boundary. You're going to live within a city, a county, a state, a special districts. And so it's useful from the citizen's perspective to develop and understand the nature of governmental accounting. If some of you go to work for accounting firms, local accounting firms and regional accounting firms, this sometimes is kind of a bread and butter area for them. In addition to doing taxes, they may do audits and consulting work for local governments. So it's helpful to know something about them in case you end up being able to work in that area. Also, government hires accountants, and so they need help too. So some of you may be working at state or local government in an accounting or a budgetary or even a programmatic area that knowledge of governmental accounting is important. So at any rate, I appreciate you. I hope this is helpful. Again, these are going to have to be refined going forward, and but I'm trying to help you out as much as I can as we move through this semester.